Median home prices looked fairly reasonable in the US through the early 2000s, but after about 2003, you saw this huge spike where prices started to skyrocket. And yes, I get that houses have always been expensive, but this chart doesn't even tell the full story.
This is all the result, though, of low interest rates. Ever since the mid-1990s, interest rates have been on a steady trend downwards, and when interest rates go down, asset values go up because they become cheaper to finance. So if you're buying a house like that, that just skyrockets in price the lower interest rates go, and now we're at a point where people just expect interest rates are going to go down again. They might not. I'm just saying.
Patrick Bet-David actually talks about zombie companies and how the United States has a real problem with these zombie companies. Basically companies that don't actually make profit, but because interest rates are so low, they can essentially borrow money forever. Well, when interest rates go up and it becomes expensive to borrow money, a lot of these companies are not going to survive. We're at this weird place where it's like, again, use a Patrick Bet-David metaphor. The US has been on steroids for so long, at some point we got to come off. And another conversation that I don't think a lot of people are ready for is when we print all of this money, when interest rates are so low and so much money is being created quickly, where does all of that money go? It goes from the bottom to the top. I'll give you an example. You got your $2,000 stimulus. Let's say you bought tires with it. Cool. You've got tires that are going to last you a year. All of these business owners are collecting money. It's going right back to the top. What can they do? They can buy real estate. They can buy real assets with all of that money that's being created quickly. Drives up the cost of living for average middle class people like us because they got all that money so quick. They were in position to basically collect that money by owning a business. It's not good when we print money so fast like this.
From the 1960s through the early 2000s, home prices were about 4 to 5 times more than median income. In 2022 though, home prices are about 8 times the median income.
Again, just keep in mind that all of a sudden in the late 90s, they started doing McMansions. They started building way more square footage. Now, yes, housing prices have also gone up, but I also think that's a lot to do with interest rates. Mortgage rates go down, house prices go up, square footage is going up, there's a lot to it.
Now, Graham brings up some really good points here, which is if the average square footage of houses is going up, how can we expect the price not to go up as well? I have to look at it and ask the hard question, though, that I feel like a lot of people are avoiding. Why is it that nobody's creating affordable single-family homes, right? Like cheaper houses that, yeah, they're not a lot of square footage, but it's something that starting out families could buy. That used to be a thing, and it's not anymore. I don't know if it's like a lack of monetary incentive or what it is, but I want to ask the hard question. What do we do to get that? What do we do to get more affordable single family homes that are good starter homes, right? I know a bunch of folks in my age group, right, in their early 20s that we don't want a huge house. We really don't want all that responsibility yet, but we would like to build some equity. We'd like to get our foot into something, actually own something, not just be renting forever where the price goes up and you have no control. But it just seems like nobody wants to build those kinds of houses. I don't understand it. I'm genuinely asking.
If we look at the money printed since 1965 and compare it with median home prices, these graphs are almost identical. The more money the government prints, the more expensive homes get.
Yeah, I agree. There's a lot more money in circulation. Asset prices are skyrocketing higher.
I got Graham agreeing with me.
It's what we called the reverse crash.
That's crazy.
Well, basically, inflation causes asset prices to balloon so high that most people just get left behind if they're not invested. So that's why I think it's so important. Middle class, low class, upper, it doesn't matter. You gotta invest your money long-term in assets that are diversified across housing, equities, maybe some bonds, hold a little cash, a little bit of everything. So that way, if they print more money, you're in a good position to at least make some money.